afternoon and welcome to the third joint series with the Financial Times on conversations with European leaders. My co-host today is Jim Brunsden, who is a Brussels correspondent here in Brussels. And I am delighted to welcome the Commissioner for Cohesion and Reform, Commissioner Ferreira. Welcome, Commissioner, to this series. Thank you for accepting our invitation, and we are delighted to have you.
Thank you very much for inviting me.
Absolutely. This is important times, and you're dealing with a very crucial portfolio in the attempts to answer how we're going to deal with the coronavirus. You deal with cohesion and reform. I actually had, in preparation for this meeting, I went back and read the mission statement that you received from President von der Leyen, where she's asking you to help those hit by the twin shocks of the digital and the climate transition. This was, of course, in a different world when this letter was written. We're walking up to a shock that is actually very comparable to the Great Depression shock, if not bigger. And all of this in the space of a few weeks, actually, a realization that we're here to deal with an enormous shock, the shock of the coronavirus. How do we deal with the emergency pandemic to begin with? But also, what types of tools and what types of policies do we put in place to try and rescue whatever we can, but also recover in 6 months from now, in 10 months from now, when the pandemic hopefully will have ceased. Your portfolio is cohesion and reform. What are your initial thoughts on the role of cohesion to deal with the pandemic crisis?
Well, in fact, I'm very grateful for this invitation, because sometimes citizens and even people that are experts, they get a bit lost with everything that is happening. In relation to this crisis, I would like just to start by saying that sometimes we forget that the health sector is a national sector. It's not in the hands of this European framework to address health problems and health policies. So initially, what the Commission did was actually to try to control the instinct by different member states to close themselves and to try to solve their problems by themselves, closing borders, preventing people from moving, preventing goods from moving, sometimes even food or medicine. So it was really an instinct, a natural instinct, but progressively, the work of the Commission has managed to harmonize practices. I mean, from not a legal imposition, but by dialogue, by permanent following up on what was happening. In fact, the borders started functioning. The vital food goes through, medicines go through. Now we have common procurement of medical equipment. We have organized transfers of citizens with common flights. And okay, so all these immediate things were done, but one of the first policies to react was in fact cohesion policy. Cohesion policy has shown is one of the oldest policies in Europe, as you know, and it has still and goes on having a very clear mandate, that is to combat the excessive asymmetries in growth and in sharing of the common welfare that normally an internal market based on competition would stimulate. So the cohesion policy is the other side of the process, so that by helping regions to be able to compete, then you share in a more fair way the gains of the internal market. But also this cohesion has shown through time that it has a very, very strong capacity to adapt to new challenges and to the immediate crisis. We did that in the past, and we are doing it now. So in the beginning, on 13th of March, we had already the first initiative, and by the end of March, we had the second initiative, and by the end of it, in fact, we changed with a very, very important cooperation from the European Parliament and from the member states. We managed to say to the citizens the following: okay, we have money that was destined and allocated according to the usual rules to the different member states to promote this cohesion, infrastructures, schools, even hospitals, because also cohesion policy supports the infrastructures of the health infrastructures, because they are very essential for the development of regions. But okay, this money, member states can reallocate it to tackle the critical emergency issues. And by now, the margin of maneuver that member states have is enormous. So what they can do, they can redirect the funds towards basically health expenditure, towards support of small and medium enterprises, and also the running costs of enterprises are being co-financed, and jobs, because it's very important that you don't create excessive unemployment, because then you kill the dynamic of the market. And so keeping jobs going with this part-time or short-time contracts that then were reinforced by SURE, there is this combination of funding that can help people not to be completely exhausted in terms of their financial capacity. And so these were the emergency things that were decided. And in the last phase, in second phase of this initiative, we also allowed for the co-financing to reach 100% of the total cost. So this is a big relief for member states. It is the emergency situation. This comes together with a lot of other actions that were taken at the European level. Some of them, a crucial one was the ECB initiative for the 750 billion of capacity to support sovereign debt. But also at the European level, there were some other initiatives, namely an important one. And this important initiative is that the usual state aid rules were waived to a considerable extent. And so what does this mean? This means that a member state can support its enterprises, its firms, its corporations to a much bigger extent than before, which triggers, of course, if the European Union doesn't have the firepower to do it by itself, it releases the member states. It allows the member states to use their own firepower. Of course, this has a secondary consequence, that is, the internal market will be very imbalanced in the follow-up of this, because certain member states have deeper pockets than others. Others almost don't have pockets at all. And this brings forward again the need that in the recovery process, cohesion and convergence is put at the core of our agenda. Not only in terms of the usual way to do cohesion policy. I hope and I wish that member states and Parliament agree on a very fast finishing and conclusion and adequate conclusion of the next supporting period, so that with this change, with this reallocation of funds from the usual cohesion policy into these emergencies, that we don't stop the process of convergence. That's what the policy exists for. And so a continuity has got to be guaranteed in a swift manner, so that in fact some projects that were phased up or interrupted, or that they can really be relaunched, because this is part also of the recovery. If you have a big project that you phased into 3 or 2 phases in order to be able to reallocate the money, then you stop also the business that is associated with those projects. So that's not convenient. And so, but in a nutshell, what we did was to come very quickly and to give immediate answers. And I underline with a big cooperation, a fantastic cooperation from the European Parliament and from the Council. But in fact, the available money that is being used comes from here. and it will come from the other elements, but that is more debt-based. I mean, now we have the other elements, the initiative from the SM, we have the initiative from, but probably the EIB initiative and the Cohesion Fund initiative is what is answering immediately with grants and not necessarily increasing the loan, the debt bill of member states, which is another problem, but we can address it, I'm sure, during the discussion.
Indeed, thank you, Commissioner. You've touched on many issues, and
That's it.
that was very comprehensive. If you can probably maybe zoom on a few of these issues, because as you said, there's a lot that has been done. I think the one big question that we all have when it comes to cohesion is whether cohesion, as you say, it is a tool that has got a very clear mandate and a very also long-term perspective, and therefore the question that arises is whether cohesion is the best tool to really tackle the crisis. Certainly at the short run, maybe in the long term there is a clearer space for it, but in the short term, whether there is a role that can be leveraged and how can this be implemented. It's interesting you talked about the initial reactions, also humane reactions by Europe, which were probably introvert, and then how the Commission helped afterwards to try and bring everybody on the same level and provide the solidarity that was needed in this respect by allowing exports, by make sure we coordinate the borders and all these issues. But the fact of the matter is that we are all in the same storm, but we're not in the same boat. And I think you said that as well, when you said that not everybody has the same size in pockets, and that's why we're looking for more centralized solutions, of which cohesion could be one of them. But I'd like to, and here I'd like to bring also Jim in, because we talked about this also yesterday. How appropriate is cohesion as an immediate tool? You've mentioned the plethora of tools both countries, but also other European institutions are doing, the ECB, the EIB, the SM. All of them are of a debt nature. Cohesion is not of a debt nature, it's much more of a transfer, and it has got a very specific purpose. How much can you mobilize this in the current context, cohesion, to help fence off some of the shocks, of the impact of the shock that we see immediately?
Well, in the present context, what we are talking about is about 54 billion, more or less, of funds that were still, because we are in the last phase last year, as you know, of the multi-annual framework. So the execution of projects has this trend to go up in the last phases, because in the beginning you are preparing the projects and then you start spending money later on. But this doesn't mean, and the execution, the average execution rate payments, in fact, were less than half of the total amount that was available, but that doesn't mean that you can interrupt all the projects. So this means that what could be reprogrammed is being reprogrammed. Some funds you can exceptionally, you can move from, you will be able to move, or member states can move the money that is allocated for the social fund or for the regional development fund or even for the cohesion fund, can move and move between the different funding instruments according to their needs. And they can also disregard in this emergency the allocation that was predefined in relation to the thematic subjects that could be covered. So there was an earmarking that was going on for greening or for digital, and we had to, to remove these constraints, allowing also for adjustments between regions. So, this is really a very exceptional and very and shows exactly the will to answer the emergency. But your question raised another issue. Your question raised the issue: is cohesion policy the adequate one, the adequate instrument? Cohesion policy has, in fact, the tools. And sometimes we tend to look, even people that are informed and journalists, they look at the cohesion policy as if it was a kind of old policy that does infrastructures, and that, cohesion policy adapted a lot throughout time. And now if you look at the overall amounts, about 65% of the value of the amount managed through cohesion policy is directed to the greening of the economy. So doing projects that really contribute to our climate conformity, or digital, or it depends on the regions, but that's just an example. On the other hand, the kind of instruments that were used by the cohesion policy was traditionally just grants. Now it's a mixture. So you can have grants, you can have loans, you can, so also the instruments, they are much more market based, and according to the specificities of each line of projects, you can do different combinations of projects. So yes, I think we have a toolbox. This is about 1/3 of our little budget. And this is something else that I think we should underline, because sometimes citizens expect that the European Union will react like a federal government. The budget for the Commission to act is 1%, as you know, around 1%. So it's the usual discussion, 1% of the total wealth. So it's really a minimum thing, but nevertheless, 1/3 of this amount has managed to do a lot in terms, and everybody in Europe knows the cohesion funds and has benefit from them. Initially, in the earliest stages of development, you tend to concentrate on removing barriers to development, and these barriers can be scarcity of proper water, it can be scarcity of a highway or a road, or the management of your waste, because you cannot live in a place that is completely dirty and disorganized. But progressively, we went on and on and on. And we can really have examples now of very sophisticated projects, programs combined with innovation, with research. And this touches another element of what you mentioned, is I mean, can cohesion do it by itself and alone? And I don't think so. I think cohesion has got to be there. Goes on adapting to the new circumstances. I find it the most robust policy to make the internal market and the common currency feasible. Otherwise, they won't be feasible. And sometimes we don't realize this. But I think that overall, if you look at the recovery plan of what we'll be doing next, you will have this massive imbalance between the conditions for competition of the different firms, the different corporations, according to the place where they are located and the importance that member states allocate to them. The announcement that was made by Germany, or that was made even by strong countries like Italy or by Spain, in relation to the capacity they had to foster a relaunch of the economy, is completely different. It's completely different. And so if we want to kind of stabilize the conditions for the internal market to function, we have got to have this kind of recovery instrument that levels out, so to speak, this recovery that, given the circumstances, is much based on the capacity that each member state has got to foster its own development. And so I think we have got to be aware of this and to understand that, of course, it would make sense that through legal constraints of like the compliance with Stability and Growth Pact or the state aid rules, that we would kill or diminish the capacity of people and of countries to survive this terrible crisis, or to cover for specific expenditures. But having said this, when we get out of it, we have got to go back to a cohesion policy that does cohesion, and to an internal market that is actually an internal market.
Thanks very much, Commissioner. Thank you for speaking with us today. This is, we've already covered a lot of areas, I think, both to do with the present crisis and the immediate crisis response, and the recovery and the role of cohesion there. There are a couple of things I wanted to pick up on. One of them is, you've mentioned this yourself, but a lot of restraints have been taken away in order to free up money, to free up this 54 billion. So transfers between funds, transferring money away to different regions, and 100% co-financing. So what is your exit strategy? I mean, you've said at some point we have to get back to normal cohesion policy. What's your exit strategy from this to actually reintroduce the restraints? Because presumably those rules and those restrictions, they're there for a reason in normal times. Secondly, I wanted to pick up on a think tank report that came out a couple of days ago from the European Stability Initiative. I know you responded to this also on Twitter, but it's a report that points out that Hungary received more than Italy from the investment initiative, from the Coronavirus Response Investment Initiative, both in real terms and as a share of GDP. Does that show some of the limits of cohesion policy as a crisis fighting tool?
Well, thank you very much, Jim. It's a pleasure to speak with you and to speak with the media you represent, as well as I mentioned, also with Bruegel, with important think tanks. On cohesion, yes, we have changed a lot of things. Of course, it is true that we are in the last phase of the multi-annual period of programming. So the changes that we are making in this last year, and also with the permission that certain projects between June, I mean, in 1 or 2 months, and 1 year ahead, they can be financed, if member states so decide, 100% by funding from the European Union, is really an exceptional answer to an exceptional circumstance. Having said this is not done without a framework, so we are still operating within the legal framework that is given to us by the European treaties and by the European specific legislation on this topic. And we have had to make the right amendments, and this is the reason why I was thanking the European Parliament and the Council, because we had to make adjustments, very specific adjustments in the present legislation in order to make it feasible. But of course, it is true. Also, we are in contact with the European Court of Auditors, and so that we really, understand the consequences of what we are doing. But we thought that we could not do otherwise, and go on insisting that you would, be blind in relation, or autist in relation to the terrible situation that member states were facing in this specific emergency. But having said this, of course, the important thing is that we learn from here. We understand that probably in the next framework of aid that we were discussing in a very, emotional way. But now I hope member states in particular will realize that in fact we need this policy, because we are all together, and probably we are not exactly in the same boat, but we are so intertwined, and that in fact we cannot go one by its own way, and forget that we are in common ground, and that we have a common market, and that is absolutely essential. When you refer to some news that came on a specific country, on Hungary, by doing what we have been doing, this adjustment, this possibility to move from funds from usual purposes to new ones, we are not creating new funds. We are not. It's not new money, because we don't have it. It's the money that was already allocated to each member state. So each member state has, in the beginning of this multi-annual period, they have an allocation that is agreed between the Commission and the Member State to execute a certain number of investments, or to implement a certain level of development, of regional development instruments. And so the exact value that is available, or that each member state wants to reprogram, depends on, within its own envelope, depends on what the options of member states. If a member state is rich enough not to do any use, or was fortunate enough not to have any major crisis, probably it can go on doing business as usual. But if the country wants and has the need to reprogram to address this excessive costs related to health or to bankruptcy of small and medium enterprises, of course, the country can be authorized to do that. And we have also simplified a lot of procedures. And this is something we want to keep to a certain extent to the future. We had already anticipated that we needed to simplify the procedures and red tape and bureaucracy. And we had already proposed it to the European Parliament and to the Council in the proposal by 2018. And I think this proves which ones of these simplifications can still go on and be kept. And this is a reflection we are having and we are developing, so that we also learn the lessons and improved techniques of management that we can get from here. But in fact, this was, I mean, something that doesn't make sense to say that there is more money for a country A or B. I mean, the money that is available is one that was there. And sometimes the countries that had not had such a speedy way of spending their own money, they have now a bigger margin of maneuver than the others. But on saying this, I'm not referring to the specific case you are mentioning. It depends on the different member states.
No, I understand what you're saying, that obviously these envelopes, these specific envelopes for specific member states were set several years ago. But are you concerned at all that in the specific context of the crisis, that the money is not going where it's most needed? I mean, obviously, if the aim is to redirect this money towards healthcare costs, there are some countries in Europe, Italy, Spain, probably first and foremost, which need the money more than some others would right now.
I think the countries that you mentioned, they have a substantial margin of maneuver in relation, if you refer exactly and only to the health-related costs. On top of these, other instruments were created, as you know, from the ESM new line of support, exactly to support that kind of emergency. And also, excuse me, and also there is, we opened also a new facility that that sometimes is not that well known, and this is the possibility to use this emergency fund, the solidarity fund that was used in earthquakes, and the eligibility was very much related with natural disasters like earthquakes and like floods. And most member states, unfortunately, had already to use them, but particularly, I mean, also Italy and Spain and France and Portugal, they used it. This was only available for this kind of usual natural disasters. It was created, a special line was created also already in the first package of cohesion policy, so that also member states could be reimbursed in relation to expenditures, excessive expenditures, provided those expenditures reached a certain threshold that can be either an absolute threshold or a certain percentage of their overall wealth in these emergency actions. And so for health-related issues. So in a nutshell, I think for the emergency, for the payment or repayment of the costs associated with the health problems, I think the available amount of money, I would anticipate that it is adequate, it is enough. Another issue is what will be the impact on the economic on the economics and on the enterprises, the jobs that will come once the dust or falls down and we see where we are. And of course, in that sense, the IMF figures are a bit worrying. Of course, the Commission is going to publish its own estimates on the 7th of May. But nevertheless, the statistical information is not available yet. So we are really, and probably you heard what was yesterday discussed with the European Parliament, the Regio Committee, that in fact one possibility would be to have a kind of an extra amount of available money that would be reallocated and redistributed once we know who suffered the most from an economic perspective in the aftermath of the crisis. This could be done as soon as we have sound statistics. Maybe within 1-2 years, we could really reallocate and help more those that suffered the most, which is different from those that suffered the most in human terms and in human losses, because human losses were absolutely devastating. But there is not a perfect correlation between the economic impact and the health impact. You may have certain regions that may eventually not have, in theory, not even a single human loss, and nevertheless, they lose completely their business. And I'm thinking, for instance, of outermost regions or peripheral regions, or regions that depend a lot on the physical contact. Exporting regions, touristic regions, you may have regions that export raw materials, or that if your business model as a country depends a lot on transports, international transports, or if it depends on the movement of people or the movement of goods, you are bound to have a massive crisis, and the more you suffer more, the more this is sometimes the only activity that you have in your economy, or if you depend a lot on that. Whereas if you have a business model or a country business model that is based on digital contacts and non-material contacts, then you can really go through it. You can eventually have a lot of human losses, which is the most terrible thing of this process, but you may still have your economy floating and functioning. So I think we need really to look very carefully at what is the post-coronavirus crisis in economic terms, and be able to create some flexibility within the cohesion policy for that.
Actually, if I may, we would be very keen to move also to what we can do in the future. But I would also like to take a question that came in from one of our participants about what we can do today. Because, I mean, the next thing we should talk about is what we should do tomorrow. But he's asking, named Anonymous, is the Commission willing to prolong the current funding project period to provide flexibility also to member states with limited potential to reallocate funds? Is this something that we can do now before we move on to what we can do in the future?
Well, if I correctly understand the question, I think what we have now is answers with the available means in all possible ways. There is no member state that doesn't have any margin of maneuver. All member states have a certain margin of maneuver within cohesion funds. We don't have countries that cannot do anything, also because member states received this is, I didn't want to go into a lot of technicalities, but anyway, in the management, in the routine management of funds, there is this need each year to reimburse the Commission of the so-called unspent balances that you have. This unspent money usually would have to have been given back to the Commission. I mean now, and that was another decision. Member states can keep it till the end of the execution period. So this represented 8 billion of liquidity. That is, it's like a free interest loan that is in the hands of member states until the end of the programming period. So eventually until 2023. There is a very interesting, and I find it very also symbolically very important instrument, that is this SURE, this new project to support member states, to help member states to support the part-time job that can be used instead of unemployment, of people being sacked from their jobs. So the firms can reduce the amount of work, the amount of payment, and the member states can give some complementary support to these workers. And there is this mechanism. Sure, I hope this week it is finally confirmed. But in fact, it's really very important to have this element that is based on the European budget, but with guarantees from the different member states, in order to create a 100 billion amount that can be used to support these jobs. Then I already mentioned the Solidarity Fund that can really reimburse member states from the past. I also mentioned that these adjustments in the cohesion funds, in all the cohesion funds, this payment until 100%, if the member states so wish, will stay for the last phase. This is last year. So the question is exactly, if I correctly understand it, what will be the follow-up? For time being, that's not all we have. All we have, and I cannot imagine what we can do more. Because there is no extra money. I mean, if we want to and here I go back to where I was, if we want the European Union to be able to do this, to have more firepower, we have got to take this opportunity to move forward and really to change, to give a kind of a leap, a quantum leap that Europe has been doing throughout all its history in specific crises. And we say that we usually used to say that the European Union grows through crises. But it's important that we have a direction and a political will. But if we want the Commission or the European Union to move forward with more competence or with more firepower, then in particular the member states have got to recognize this role, and the Commission will use it to the limit of the openness that is given to it and of the means that is given to it. And this is why the Commission is proposing and trying to test different alternatives in order to push forward something that is badly needed. That is, to have some instruments that can not only guarantee this cohesion and convergence, but also, and this should be in our minds for the future, can give more easy answers if a crisis arrives. This time we had an unexpected crisis, but we don't know if the next one, I hope it will not be a climate one, but we don't know. We don't know. It could happen. And so the Commission has got to be capable of implementing at the community level some responses, quick responses, and they've got to get organized for it.
Where this conversation seems to be taking us is into the MFF and the ambitions of the next MFF.
Quantum leap, I believe the Commissioner said.
Yeah, exactly. Commissioner, you've spoken about excessive asymmetries that countries will face coming out of the crisis. that we'll have an internal market which will be very, very imbalanced coming out of the crisis. And essentially, in a way, you've joined a chorus of voices on this, because Emmanuel Macron recently has spoken about the risk of distortions to the single markets, because some countries will be able to, like Germany and the Netherlands, who you mentioned, they'll be able to provide extensive amounts of state aid to their industries. Other countries, especially, or for example, in Southern Europe, won't be so able to do that. So to what extent can you use cohesion policy in the next MFF to try and level out that playing field somehow? And what will the Commission be saying in its MFF proposals next week in that regard?
Well, this is a very, very important question, because as I told you before, it's not only the cohesion policy that has got to be as such reinforced. It's the cohesion has got to be also understood by sectoral policies, because if you manage to have a recovery policy that includes, and it would be important to have it, that includes an element of industrial policy, and it has been very, very thoroughly discussed. Of course, this industrial policy has got to bear in mind that it cannot be just a policy for the winners, for the usual winners, or for the most competitive areas. It has got to have in its DNA some concern that the gains that from research, from the industrial projects, have got to bring Europe together. It cannot be. We cannot split Europe into the ones that are the ones that are leading, and everybody else that is just paid to support a minimum activity that has no condition of survival. So I think cohesion and internal market, and if you add to the internal market the single currency with all the imbalances that the single currency naturally anticipates, and that all the theoretical works that were done in the preparatory times of the monetary union, they showed that you had to have some sort of instruments that could accelerate the capacity to compete by the weakest partners and the weakest regions. And so, of course, at this moment, we need, and I think also the Eurogroup has, and the Council, they have presented, already anticipated that there would be a recovery plan, and that the MFF would be at the center of this recovery plan. Now there are all sorts of hypotheses that we can work. Of course, the Commission is working very hard on this. Also, the President of the Commission has made very clear statements, and I'm sure you saw some of the very important elements that were part of the speech last week of the President when she was speaking to the European Parliament, and she said that yes, we are facing a symmetric problem, but we are living with a very asymmetric situation. And so internal market and cohesion, they are the two sides of the same coin. I'm quoting by heart, but the central idea was this. So we need not only a reinforced MFF, but a reinforced cohesion policy in that context. Of course, when we are talking about the internal market, there are other issues that have got to be addressed. And I think probably Europe should start thinking about it, about addressing it from another perspective. And this is the fact that, of course, when we are looking at we look at a corporate, we look at a firm, and we see the kind of support that this firm can receive, but we also see how much this firm pays to the member state, pays to the government, and so the taxes that are paid. And the tax system is a problem. The direct corporate taxation is a problem in Europe, and probably it will be difficult for taxpayers to accept that the burden that will come on after this crisis will be inequally shared between big multinationals that can operate and relocate their profit in certain more lenient or more competitive tax systems rather than others. This is something that the previous commission mentioned very clearly. This commission has also mentioned it again. But of course, when we are discussing internal market, being exempted from paying is very, very similar to being paid by state aid. So the two things have got to be treated on the same platform. And of course, it will be difficult that we don't address this issue. And when the citizens of Europe sometimes will feel that it is on their wage bill and on the bill of small and medium enterprises that cannot operate like this, that the burden of the paying of the debt, because this is the debt, it will be an issue. That the burden is imbalanced as well. So having this internal market and having this monetary union functioning has a lot of side requirements that I think we cannot ignore. And of course, I think we have got to level them out so that we don't face a very fragmented after crisis Europe. That would be a disaster.
Well, actually, if I may, I really like your the way you put it, that you have the single market on one hand and then cohesion policy on the other hand. We are faced with a shock that is really distorting the single market, also in view of the different responses that are coming from the capacity of different countries. So how should we think about the future MMFF in its current form or in an augmented form that will be discussed also? We will come to that as well. Is there cohesion policy then a tool for basically correcting for the imbalances that are coming on the single market? And if that is true, then how do you stay also clear and faithful to the long-term objectives of the cohesion fund, which is, here is a climate issue that will stay with us, and there's also a digital transformation that will stay with us. So how do you square the two? How do you stay clear to the ambitions of cohesion policy as indeed was constructed through this genesis, but at the same time level the playing field of the single market? Or is other instruments perhaps better for dealing with this unleveling of the playing field that comes to the single market?
Maria, as I mentioned, cohesion policy is the central policy to correct these imbalances, but other sectoral policies have got also to recognize the territorial impact of what happens, even the trade policy. When in the past we opened up to imports from China, this had a very imbalanced impact according to the kind of country we're working in. If you were a producer or if you were an importer, the consequence of opening up to China imports was completely different. So the horizontal policies, and we have known this for ages, the horizontal European policies have a very asymmetric impact by themselves. And this is in normal terms. When now you have this kind of situation, yes, of course, answering your question, yes, the cohesion policy has got to be there, because it's the policy that has the instruments, the capacity and the experience to combat those imbalances. But when we are talking about cohesion policy, we are talking about supporting growth. And one of the lessons that we have got to take is when we have growth, we cannot grow by the models of the past. So also we have cohesion policy, but we have also the reform agenda. And this reform agenda is something that I would like to touch as well. We have an instrument that is the BICC that is still being built, and that was supposed to support, and is supposed to support the countries and here I add that are more in need of this support, so that when they grow now in the post-crisis, that they also reform themselves. And by reform, I talk about supporting the quality of the public administration, supporting the quality of the education system, supporting the quality of the research and development system, or of the universities, or of the tax system. So reforming in the good sense of the word, because it has been very distorted in the past, but reforming means using your money in a better and more efficient way. But of course, I think because we had a crisis, we should not let go the initial objectives that were in the Commission agenda for the future. And this is greening, and this is digital. We don't, in the past, we were talking about digital as if it was something that was forced in, anticipated. Now we realize that we could not have survived without the digital. And this means that the growth has got to be prepared for a massive use of the new technologies that are available to us, and Europe has got to be in control and in the leadership, but has got to understand that the more away from the center you are, the more you need a digital competence and a digital access. The same thing with the greening, what we call greening. I prefer, greening than climate, because greening includes all the elements of a growth that is not destructive of the environment, and that doesn't create our own kind of self-killing, because it doesn't make sense that we don't grow in a more modern way, and in a way that is more compatible with a long-term future for our survival. So this means also that some of the elements that we had already included and had prepared for the new multi-annual framework have got to be looked at, of course, but with all the new information that we have. But I would consider that we should go on with it, because a carbon-based future is not a sustainable future. If we want to move, to change our way to produce and our way to use energy, we have got to help the transition of those regions that are still depending on carbon. And for that, we had prepared a series of instruments, in particular the Just Transition Fund, Just Transition Mechanism. Of course, I think we should really have a positive plan for, and we are having it. It's just continuation of what we have in relation to new sources of energy, and in particular renewables, but also make an internal market for renewables through the possibility to transfer renewables, to exchange renewables as any other good. And I think that if we think for the future, if we think positively, we need, of course, money, resources. There are all these possibilities, and we have got to stabilize what are the mechanisms that we can use, but we need it. But having this means also implies that we have got to have a modern economy, a more digital economy, a more green economy, but also a more cohesive economy that doesn't leave regions and people behind. Because if we are not capable of doing this, then I don't think that our future will be sustainable as such.
In fact, on the very last point, if I may, sorry, James, there's a number of questions now that are coming in on exactly the last point. If I may, cities are somebody called Theo is asking the question, and many are supporting these questions. Cities are the entities the most hurt by lockdown measures and will have to adapt with the necessary sanitary measures and a number of different things. What is the EU doing to support cities? I mean, this is exactly on the last point you mentioned. Can we do something to support those, particularly in cities who are the most badly hurt?
Yeah, cities have been very much helped, and this is something that has been in progress. in the European agenda and in the cohesion agenda. But of course, we have got to be, I mean, now we have, that's the reason why, in relation to tackling this emergency, also funds that were allocated, let's imagine, to southern Italy, can be relocated to tackle the problems in Milano area. I mean, the possibility to transfer funds from the weakest regions to the most powerful regions are possible now. Member states are doing it. Each member state has its own situation and its own administrative capacity and the way I think functions internally. But from the European point of view, we are allowing this transfer because the emergency is in the big cities. Having said this, we have got to think for the future in Europe by thinking that a more balanced Europe is a more sustainable Europe. So the reason why certain regions and certain urban areas and metropolitan areas are just bursting with people coming from surrounding areas, and after a while, the so-called economies of scale, so the advantage of having a big dimension, are overcome by these economies of scale, by pockets of poverty, pockets of exclusion, difficulties in transports, excessive pollution, is because, in a way, the opportunities for these people that came to the big cities to have a proper life and a decent life in medium-sized towns or in the rural areas was completely killed by the functioning of the economic system. So the other element that I'd like to put in, speaking very frankly, is that we have got to, the logic of cohesion policy is to help more those that are not able to help themselves. So if you are a rich city or if you are a rich region, of course you may have problems inside, or if you are a rich country, you have problems inside. But there is an element of proportionality, and this means that for the same problem, we should help more those that are less capable of helping themselves. And so cities, of course, they have been helped a lot. A lot of money is dedicated to them. In the past, 5% of, they were even, I mean, they had a simplified process to exceed to 5% of the cohesion total funds for development. But we have got to be more and more demanding on what is this money for, because the big cities, the big metropolitan areas, they have got to be helped to do something that is exceptionally relevant, or that is exceptionally difficult to solve, or something that is of a very innovative character, and so that brings a value added to the whole community. And this is the kind of issues that can only occur when you have this specific mix of universities, financial power, knowledge, administrative capacity, and altogether they have got to deliver top products. We should not, from my point of view, use the structural funds to do basic things that the big cities are capable, because they really have their power and their influence and their political voice to really solve their problems by themselves. So in a nutshell, at this moment, a lot of the health dedicated money is in fact to the big metropolis. But one of the lessons that we have to take with us is that a more balanced country and a more balanced Europe is a more resilient Europe. And of course, we have to give appropriate answers to the place where everybody lives, to the big cities. Big cities and cities are more and more the preferred place for people. But we cannot discard or disregard the quality of life away from these cities. And this is more of a challenge for us to rebalance the development rather than having this simple solution of allocated funds to the ones that have a stronger voice. But also, this is the counterpart of it. They also have sometimes the highest capacity to solve their own problems if they get organized in that direction. So there is this kind of fine-tuning the message and fine-tuning the preferences when it comes to the cohesion policy.
Very quickly on this, you've mentioned things that need to be changed in light of the crisis in the MFF. Is the Just Transition Mechanism and the Just Transition Fund one of them? In the Just Transition Fund, I think, has 7 billion going by the Commission's proposal from January. And then you have financial engineering and a role for the EIB to get up to 100 billion. Do we need more? And also there was a question from a participant called Torsten on this, saying, will you still propose a regulation for the third pillar of the Just Transition Mechanism? And if so, when? So I wanted to bundle that into.
Well, on Just Transition Fund and mechanism, we are working very, very hard on it. Since the beginning, we have said that, yes, it's absolutely, I mean, we are playing with money that we had. And this goes inside the whole framework of the MFF. So what is the final value of the MFF? On the specific items of the Just Transition Mechanism, yes, we are working very, very intensively. We go on working on the regulation and legislation that will accompany the Just Transition Mechanism. So the three pillars are being object of our concern and of our work. Of course, if we could have more money, yes, it would be very interesting. If we could operate with I mean, more easy engineering to produce and to deliver a fair transition, that would be absolutely great. Having said this, the environmental agenda is not just carbon and carbon storage or carbon, I mean, use of alternative sources and the evolution and transition to a less carbon intensive kind of economy, but also it's working on the fight against desertification. It's the fight against forest fires. It's the way you manage the water resources. So it's the way you protect biodiversity. It's the way you produce your food. And so the environmental agenda is such a big thing. It's such a major growth agenda that I don't think we should really be very eager to destroy what we were already in the path of doing, because it makes more sense now than in the past. I mentioned en passant when I just touched upon it, but I hope that the next crisis, big crisis, doesn't come from climate, because in fact we are playing with fire, and we have seen the young generation that usually didn't have such a strong voice. They were really coming forward and saying, please grow in a different manner. This is an opportunity also, and I think we should grasp this opportunity and really grow in a more compatible way with our environment, because that is also our survival, in a better way in terms of using the technologies, making the best use of it, but also in a more cohesive way, and in a way that doesn't grow through imbalances and crises, but and political and economic disarray, but that grows through a balanced and mature way, in order that we stabilize and we show to the world all this that we have promised, that we are able to have a democratic, politically sound and prosperous area in the world. The world is looking at us, and I think we cannot also ignore this fact. And I think really we have got to come stronger from this crisis. I hope so.
Commissioner, thank you very much. I'm very much aware of the fact that we've exceeded the time you've given us. Can I perhaps ask one last word from you on what do you expect from the council meeting on Thursday, or what do you hope for the council meeting on Thursday?
Well, I hope that the council is able to tell the citizens that Europe is here for all of us, and that Europe is a project that comes from long. The reason why Europe survived until now was because Europe in the post-wars and the post-Second World War was able to benefit from a Marshall Plan, was able to benefit from different management of the German debt at that time from the one that had been managed in the First World War, in the post-First World War, was able to grow with a new, fresh way to approach the losers of the Second World War. So I think this is all a lot of history, and from all this we got from this different approach in which we look at the future and we create conditions for a win-win. And when we talk about the Marshall Plan, I don't think that the Americans were just charitable people. They just understood intelligently that for the world to grow, we could grow together or we could not grow at all. This is going a little bit backwards, but I think if we want to think of Europe as something as a project to be there for 2, for 3, for all the decades ahead of us, we have got really to lift our head, to think a little bit out of the box, and to understand that Europe should and must quickly create conditions for recovery that can really be as strong as the recovery that I'm sure China, the United States, and so many other big powers in the world will be able to organize. And we have got to bear this in mind, and not a very, very short-term game of interests and of needs to give comfort to national public opinions that sometimes are not sufficiently informed about the risks of the game we are playing, but also of the opportunities that we have ahead of us if we are intelligent enough to grasp them.
Wonderful, Jim. I don't know if you have a final question for the Commissioner.
I'm very conscious that we're over time. So I don't know. I mean, Commissioner, could you give us another couple of minutes, or?
Well, it's okay. I mean, it's absolutely fine.
No, I mean, it's just, I wanted to pick up on one specific thing you touched on earlier, which was when you talked about how in the coming MFF period, there's going to be a need for flexibility. So in effect, we keep some money unallocated. And then when we've got a really strong statistical analysis of who suffered the most economically, then then that money could then be allocated, and that way we spend it where it's most needed. But you mentioned tourism as one aspect of that. I mean, obviously there are regions in Europe which have benefited enormously from tourism, but now they're going to find themselves, well, out of pocket, to put it mildly. So is that a priority area that you're looking at, that we're going to have to redirect cohesion money towards regions we've never had to think about before, but which now are going to really be suffering in the wake of the crisis?
Well, definitely. When we look at the next MFF, we have got to take our lessons. And when we talk about flexibility, you mentioned flexibility, but you also mentioned priorities. Of course, already now a lot of support is being given to touristic regions, and of course this has got to be stepped up. I mean, because I'm absolutely sure, even before I get statistics, that they will be suffering a lot from this crisis. But it's not only tourism. Also, probably we'll have to reflect on how to address the health component, or at least to enlarge. I told you that 8 billion were invested in the recent years in this framework of aid in health infrastructures. But obviously, health infrastructures and a minimum level of health services are needed, particularly in those regions that are more away from the central big hospitals and big structures. So this is part of the development. But so apart from that, also cultural activities are suffering immensely because a lot of artists, I mean, the artists perform. They need to have rooms or stadiums full of people so that they can really perform. So there is a huge amount of activities that have got to be inside the usual framework. They have got to be stepped up. When it concerns flexibility, already a lot of these possibilities of flexibility of transfers between funds were already anticipated in the proposal by the Commission in 2018. We can revise them with the European Parliament, but they were increased. I mean, from the biggest, the strongest regions to the weakest ones, it was free. From the weakest to the strongest one, the amount was about 15%, which is a big jump in relation to the past. Also, we can reassess flexibility between these objectives. I mean, seeing the best adaptation to the greening and digital according to the level of development of the different regions. But I would not imagine that, okay, we destroy everything that is already prepared for the next MFF. And it's already being discussed with the European Parliament, and is already it's such a painful, and it was proposed in 2018. We have been discussing it throughout. So sometimes you say, okay, it's a completely different proposal. No, I think we have got to go in very careful ways, but that is a personal opinion, and try to safeguard what was already there, and try really to fine-tune what needs to be fine-tuned, but bearing in mind what were already the changes that were introduced in this preliminary version of the text that is being discussed. The European Parliament is in a very cooperative, it has been incredible, the cooperation between Commission and Parliament, also with Council, but with Parliament it's a massive amount of people, so it's very heavy, but they are really flexible and quick, and I think we should really fine-tune what needs to be fine-tuned. And then there is another element that is not a minor one. What is the amount of money? Because it is not acceptable that, there is no point in now speaking about percentages, because with the reduction of the GDP, the percentage will go automatically up. So what, in absolute terms, what are we talking about? And guaranteeing that there is robust amount capable of supporting cohesion policy and cohesion actions, because we are badly in need of that.
Thank you very much, Commissioner, primarily for being so generous with your time. And thank you for sharing your thoughts with us. We are now almost 1:15, so I think we need to stop here. But again, a very big thank you for joining us today. And this is to inform also our public that this series will continue with the next event on the 7th of May with Commissioner Johansson, talking about cybersecurity issues in the time of the corona. But for the moment, let me again thank you very much, Commissioner, for joining us today. And we hope to see you soon. And we're hoping for a good result on Thursday. Again, thank you and goodbye.
Thank you, goodbye. And thank you for the work that permanently Bruegel and FT are doing. Thank you for your initiative and for allowing for this so interesting interchange of points of view. Thank you very much indeed.
Our pleasure. Thank you very much. Bye.